Welcome. In this video, we will analyze when Swftcoin will be bullish. Don't forget to subscribe, and please watch to the end to understand. The descending trend observed on the chart is not just a barrier limiting the price movement, but also a symbol of the strong selling pressure in the market. The price has tried several times to break this trend, but has failed each time. This indicates how strong the resistance levels in the market are. However, there's something important to note here. The constant interaction with this trend suggests that there is significant compression and accumulation in the market. In other words, this descending trend could be more than just a barrier. It may also signal a major reversal. The price has tested this descending trend line multiple times, continually approaching this level, and each test means the price is gathering more strength for the next move. This shows that the price is one step closer to breaking this level. Particularly, the increasing volume and volatility after each test as the price approaches this level may signal that the breakout is imminent. So, if the price does break this descending trend, it won't just be a technical breakout. It will create a significant boost in market confidence, prompting investors to start buying more, with expectations that the price will rise to higher levels. If this descending trend line is broken, it is highly likely that prices will move rapidly upward afterward. The breakout represents not only a technical success, but also a shift in market sentiment. Such breakouts encourage buyers to enter the market, as investors act on the expectation that prices will now move upward. Additionally, breaking a descending trend line often attracts more attention from investors, pulling more buyers into the market. This increased buying pressure can cause the price to rise quickly, and this upward movement can lead to a surge in market momentum. At this point, the price movement upward after breaking the descending trend line will not just be the beginning of a short-term rise. Instead, this breakout could be the first sign of a long-term upward trend. When prices break through a resistance level and move into a new range, it typically creates a significant psychological impact. Investors see this move as an opportunity, often leading to long-term buying. Such breakouts often allow the price to reach levels that haven't been tested before. Investors can track this movement and take advantage of the new upward opportunities in the market. Moreover, breaking this descending trend is important not just from a technical analysis perspective, but also from a psychological standpoint. When market participants see the resistance level being broken, they tend to buy more. Investors believe this breakout marks the beginning of a new trend, leading them to increase their positions, which enables the price to move upward quickly. You can wait for this trend breakout for a buying opportunity. However, it's not enough to just look at trends. We also need to consider other metrics. Keep watching. The support level where the price currently stands is significant not only technically, but also psychologically. There are always certain points in the market that serve as critical thresholds for investors. This level is particularly important because it's an area where the price has previously bounced multiple times, indicating that buyers are active and selling pressure is decreasing. When the price approaches such levels, investors typically watch carefully to see whether the price will break through or bounce off this level in order to determine the future direction of the market. In previous bounces, we observed that the price rebounded from this support level and showed strong buying power. If the price approaches this support again and receives a reaction, it may signal not only the beginning of an upward move, but also an increase in market confidence. When buyers see this level as an opportunity and start purchasing more, the market balance changes, and the price gains upward momentum. Another important factor for investors is how these support levels have behaved in the past. If the price has touched this level before and then made a strong reversal, it indicates that this level is a strong support, where the price bounced back without hesitation and rose again. Such a move encourages investors and leads to more buying. This could cause the price to rise and potentially initiate a new upward trend. When investors analyze past price movements, they recognize that this support level is often a strong reversal point. This gives them confidence and enables them to take more decisive action in seizing new buying opportunities. In this scenario, buying pressure in the market increases, and the price may move upward faster. Many traders act cautiously as they approach support levels and observe how the market will test this level. If the level is tested strongly and the price receives a reaction here, it usually signals that the upward move will continue. This encourages investors to open new positions. As buyers enter the market, the upward momentum accelerates, and we could witness the start of a potential bullish trend. When it receives support from here, it will likely lead directly to a trend breakout. The descending trend seen in the RSI indicator actually marks an important phase in the market. Such descending trends typically form when prices weaken over a period of time, meaning that buyers are exerting less pressure in the market and sellers are taking control. These situations suggest that the market has reached a point of stagnation, but also indicates the potential for a reversal. Now, when the RSI has the potential to break this descending trend, it not only acts as a technical analysis signal, but also indicates a significant shift in market psychology. If the RSI manages to break this descending trend, it would be a clear sign that buyers are starting to dominate the market and sellers are losing control. In technical analysis, this often leads to the price following the same direction and moving upward. Therefore, the RSI breaking this descending trend could lay the foundation for the price to accelerate toward higher levels. This breakout generally represents a shift in market power from sellers' control to buyers' control. Investors pay close attention to such breakouts because market dynamics are changing and new opportunities are emerging. When the RSI surpasses this critical point, it acts as a trigger for buyers to enter the market with strong momentum, causing the price to move upward at the same pace. This process could mark the beginning of a long-term bullish trend for investors. Breaking this descending trend in the RSI is not only a signal for short-term price movement, but could also be a precursor to a longer-term rally. This is because the RSI, while measuring the momentum of prices, is also an indicator that reflects the overall market sentiment. Such a breakout suggests that the overall mood of the market is shifting and that the rally could continue strongly. If the RSI breaks this trend and moves upward, it is expected that the price will follow the same movement. This could mean an acceleration of the price in an upward direction and the initiation of a strong buying wave. As more investors see the RSI breaking this critical level and gaining strength, they will likely begin to enter the market, which could naturally drive prices higher. Moreover, the RSI breaking this descending trend can also create more confidence and a positive outlook in the market. Investors recognize that such breakouts are often the first signals of an ongoing bullish trend. This may prompt them to consider entering positions, which could further accelerate the price's upward movement. For this reason, we may anticipate the RSI breakout. The Vortex indicator is an important tool for analyzing market momentum, and it is especially useful for identifying the beginning or end of a strong trend. This indicator consists of two main lines, the blue line and the red line. The blue line shows the pressure from buyers and the strength of demand in the market, while the red line reflects the strength and pressure from sellers. The positioning of these two lines tells us a lot about the market's direction. Currently, the red line is above the blue line, which indicates that sellers are dominating the market and prices are moving downward. The red line being on top signals that the market is in a general downtrend. In such situations, investors should be cautious and prepared for potential price declines. However, there is always a possibility of change in the market, and this situation could reverse. If the blue line begins to cross above the red line, it suggests that the market momentum is shifting and that buyers are starting to exert more power. The blue line crossing above the red line typically signals the beginning of a strong upward move. This not only creates short-term trading opportunities, but could also be an important signal for long-term investors. Such a movement indicates a rapid change in market sentiment, with buyers starting to dominate the market. A reversal in the Vortex indicator like this could especially be a sign of a strong rally. As the blue line crosses above the red line, the market gains upward momentum. This can trigger more buying activity from investors and lead to faster price increases. For investors, this can be seen as a safe buying point, because this kind of movement marks the beginning of a trend reversal in the market. Additionally, when the blue line crosses above the red line, it means that market conditions have changed, and the previously weak buying pressure has increased significantly. This could lead to the start of a new buying rally in the market. The Vortex indicator, particularly when combined with other technical analysis tools, can be very effective in clearly determining the market's direction. The blue line being on top signals the beginning of a strong buying trend, while the red line dropping below indicates that sellers' control is weakening and prices are beginning to rise rapidly. If these changes continue, it could mean that the positive market sentiment and strong buying power will drive prices even higher. Moreover, as the blue line crosses above the red line, investors will gain more confidence, and buying pressure in the market will increase. Looking at the Vortex indicator helps us identify trends, which is why it is a useful tool. Yes, friends, I hope you liked the video. If you subscribe to my channel and like that video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.